Hi, this is John Prasinos, Editorial Director of Investing Daily, with a video update for Monday, October 12. Stocks are rising because investors are setting their sights on the beneficial developments they expect to see after November 3. Stocks finished last week higher, with the S&P 500 posting its best weekly gain since early July. The impetus for the stock market's rise was the expectation for a new fiscal stimulus package. Look, I'd love to see new fiscal stimulus. All investors would. The damaged economy really needs it, but it's doubtful we'll get it before the election. With only a few weeks to go before the November 3 vote, and Republicans eager to push through a replacement on the Supreme Court, it's unlikely that we'll see major legislative achievements before the vote. But after the election, that's when the odds for fiscal stimulus dramatically improve. Markets were volatile last week as hopes for stimulus waxed and waned, but markets are forward-looking, and Wall Street ultimately anticipates stimulus to occur after the election. Hence last week's strong gains in equity markets. My first graphic tells the story. U.S. and international stocks rose as investors regained confidence in the economy. It's true we probably face an economic resurgence in 2021. By then, election fears will have subsided and perhaps additional stimulus will get enacted. But between now and then, we face enormous peril. The coronavirus pandemic is not over, and the winter flu season will exacerbate the dangers. COVID-19 still has a grip on the nation. Take a look at my second graphic. Until the virus is contained, the stock market and economy will never be fully out of the woods. Hopes that a vaccine will magically appear on the near-term horizon are a little more than fantasy. It takes years to develop a safe vaccine. Claims to the contrary amount to political posturing. Ignore the rumors, ignore the wishful thinking about vaccines, and keep an eye on the data. The holiday-shortened week ahead will be chock full of market-moving economic reports, such as the Consumer Price Index on Tuesday, the Producer Price Index on Wednesday, the Philly Fed Index on Thursday, and retail sales Friday. The biggest days will be Thursday and Friday, as this table shows. We are seeing tentative signs of economic recovery. Last week, Market and the Institute for Supply Management released several purchasing managers' indexes, PMIs, for September, which generally exceeded consensus projections. However, unemployment remains at extremely high levels, and government assistance has run out for financially distressed households. Millions of Americans face eviction and are having trouble putting food on their tables. The transition back to prosperity will happen, but it will be bumpy. The stock market is holding up well, this much is true, but investors are very nervous, understandably so, and bad news could quickly torpedo equities. By all means, stay invested, but avoid risk-on assets until the uncertainty has abated. That's it for now. As always, I welcome your feedback. I'm easy to reach. Just send an email to mailbag@investingdaily.com. I try to answer all correspondence in a timely fashion. Thanks for watching, and please stay safe.